Does Elliott theory actually work? That is exactly what we will be speaking about in this video because I got asked a lot in the last weeks if Elliott Wave Theory is something that you're actually supposed to be following when you're developing a trading strategy. So without further ado, let's get straight in the video. If you're new to the channel, I'm a top author on the trading platform, and every single day I share free education and analysis on all my platforms. So I suggest that you subscribe to the channel, and I will see you in the video. Does Elliott Wave Theory actually work? That is exactly what I will be explaining right now, and then I will also give you a full breakdown of the situation that at the moment we have on GBPCHF. So a full breakdown starting from the monthly, weekly, daily time frame to see what opportunity we have at the moment from a 4-hour perspective. Obviously also checking up the COT data to see what the biggest banks and institutions are currently doing on these two currencies, so GBP and CHF. But first, I want to explain if Elliott Wave Theory actually works, or better said, when it does work and when it does not work. So how to actually use it. This is a question that I get asked a lot, so I wanted to speak about it straight into this video. Now, Elliott Wave Theory doesn't really work as it is expected to work, okay? Why? Because it is very, very, very discretionary. The way in which you can count the waves is very discretionary. So you cannot trade only based on that. But in general, I never suggest to trade only to have a strategy that is based only on some few confluence factors. You need many confluence factors. And just counting waves will not bring you to trade profitably in the market. So there is one thing that works quite well when it comes to Elliott Wave Theory and that you can use in the market. So I want to cut all the part in which I explain all the reasons for which some things don't work, some things do work. I just want to go straight to the point and give you the useful thing, okay, when Elliott Wave Theory actually works. So straight to the point, Elliott Wave Theory is a tool that you can use just to understand when the market is near to finding a reversal in the market. That is when it can be useful. And how you do that is simply you have to count the waves, okay? If a market creates 5 waves, then you can expect the market to give you a full reversal of the trend. That is the only way in which I sometimes use Elliott Wave Theory as an extra confluence to my strategies, okay? So if you have a market that creates 5 waves, like for example here, 1, 2, 3, 4, and 5, I expect a full reversal. Okay, I expect the market to completely shift the trend on the specific time frame on which I have counted the waves. This is just the only useful thing that you can really use Elliott Wave Theory for. Cutting all the nonsense and all the very complicated theory there is behind this. You can count the waves. If you have 5 waves, you are expected to see a reversal. Will the reversal happen? Obviously not. You cannot trade only based on this. This is just an extra confluence factor that you can use. So do not use Elliott Wave Theory alone, but you can use this simple concept as an extra confluence to your strategy when you're analyzing the market. So this is probably the best, most complete, and most straightforward that I can give, answer that I can give to the question, does Elliott Wave Theory actually work? So now let's make a full breakdown of GBPCHF and see what kind of situation do we currently have on the pair. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, starting from the monthly time frame, there is one thing that we can immediately notice. The market has very strong monthly support at this area. Why do we have support at this zone? Because from here, the market has started all this huge move to the upside. Again, the market tested this area here. Preceding all this move to the upside, again, this area acted as quite strong demand here, preceding this move to the upside, again, preceded this move to the upside, and currently the market has just tested twice this area here. And there is one quick trick that you can use when it comes to the monthly time frame, okay, specifically monthly closes. What do I mean monthly closes? I mean the closes of the monthly candles. And how can you easily see where the monthly closes are, you can go on a line chart, and on the line chart you will see all the closes, and you can see that the last monthly close is here, the monthly close that has the previous support, which is supposedly now turned resistance. And what we can see that actually the market closed above this area with this monthly candle. So the market broke above the monthly structure that the market is currently retesting, and we can expect this retest to just be a wick and the market actually make a move away from the structure, considering that we have just tested the strong monthly demand that we have just identified from a monthly perspective. We know that we have strong demand here. We know that we have broken above the resistance, which is now turned support. So all structure from a monthly perspective is bullish, and we can expect a move to the upside. Going down on the weekly time frame, what we can see. Now on the weekly, we can see that as well, all structure is bullish. Why? Now the market on GBPCHF had created this W formation. Now after a W formation, what do you expect? You expect the market to give you a retracement to the neckline before the continuation to the upside. And in fact, that is exactly what the market did. The market went for a retest of the neckline, previous resistance, now turned support, and we can expect the continuation to the upside from here. And this is basically the structure. Let me identify it for you so it will be easier. And what we can also see from the weekly is that the market has created the candle that you expect the next one to fill in the wick. I spoke about this pattern many times. When you see a candle like this, that it is green and has a wick that is long, actually not long, it needs to be longer than the body, or worst case, same size of the body. If you have a candle like this, you expect the next candles to fill in the wick. Why? What is the reasoning behind this? Simply because this wick is a retracement on lower time frames. So this wick will be created by a retracement on the daily. And as you know, after an impulse and a retracement, you expect the continuation to the upside, which will be the candle that you expect the market, which is the candle that you expect it to fill in the wick of the previous candle. And in fact, that is exactly what the market is currently doing. Now, if we go and see what we have from our retracement perspective here on the weekly, we have to remember that if we want informations on our retracement in the market, we have to take our Fibonacci on the impulse. And by taking our Fibonacci from the low to the high of the impulse, we can see that the market is moving by steps. In fact, the market first hit the 0.618. After hitting the 0.618, the next step is the 50%. And in fact, the market has currently hit the 50% and started the move to the upside. And we can expect more continuation to the upside, as we have already seen from a pattern perspective. Going down on the daily, what we can see, and then obviously we will check the COT data. So going down on the daily, what we can see. On the daily, we can see that currently the market has just tested and rejected quite strong daily support. In fact, this area here is strong daily support because it was resistance here, again resistance here, again resistance here, the market broke it to the upside, it was turned support, broke back down, turned resistance, the market broke it to the upside, creating this W formation, after which you expect the market to go for a retest of the structure, exactly as the market did, and currently this level is acting as support. And in fact, in our previous analysis on this pair, what did we say? We said that we wanted to see the market from here start a nice move to the upside, which is exactly what the market is doing, and I will link this previous analysis in description so you can go and check it out for further reference and more free education. And now that we know what we have on the monthly, weekly, and daily, let's go and see what we have from a COT perspective before going down on the entry time frame. Now, from a COT perspective, so commitment of traders, which is what the biggest banks and institutions are currently doing in the market, we can see that if we check the pound, institutions have been adding a lot of longs and closing shorts. In fact, we can see that the net positions went from minus 25k net positions all the way up to plus 6k net positions. So definitely a strong increase in the net positions that shifted from negative to positive, meaning that we went from having more shorts than longs from an institutional perspective with 64k shorts and 39k longs to having now more longs than shorts with 54k longs and 47k shorts and a positive net positioning, with another 6.2k longs added with the last report and 3k shorts closed with the last report. And if we go and see what we have from a CHF perspective, we can see that net positions greatly decreased with the last report from 17k to 14k, and 2.3k longs got closed with the last report. So CHF is getting weaker, GBP getting stronger. Can we expect a move to the upside? Yes. However, as usual, trading is reactive and it is not predictive. Now, if you are already in the long from here, perfect, continue to run the trade risk-free. But if you're not already in the trade, can you be looking for a long at the moment? Now, you must notice that the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes when it comes to the direction of the market. But the best time frame when it comes to the entry is the 4-hour time frame. And on the 4 hours at the moment, the market has just shifted from a lower low to a higher low situation. However, the environment of the market is at the moment still bearish. So if you're already in the trade from here, perfect, you continue to run the trade risk-free. However, if you're not in the trade, looking for a long directly from here is a little bit risky because at the moment there is no confirmations on the 4 hours. So how we will be approaching this kind of situation with students? As usual, we have to be reactive and not predictive. So we will be monitoring with students price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bearish market as it is right now to a bullish market, and if the market will shift from a bearish to a bullish market, at that point we will add GBPCHF to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of this impulse, correction, and impulse pattern to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day, including the weekends. So I really suggest you go and check it out, and I will see you in.